Well, let's take a look at how the Kenyan market has fared for the day. Looking at the NSE 20, it's sitting pretty much flat after falling back yesterday. It seems that we're seeing slight return to positive space on that front. Keep in mind, Pan Insurance Holdings, the top gainer for the day, up by 7.7%, and Express Limited settling at 3 shillings 50, down by 7.6% on the day. And a quick check-in on how the currency is faring this hour, 87.6 against the greenback. You're looking at a stable currency with a slight dollar strength as it stands. Well, let's move on to Nairobi and delve into some of the factors driving the markets. Geoffrey Maina, research analyst at Old Mutual Securities, is our market watcher today. Geoffrey, great to have you on the show today. So let's just talk broadly about the markets and where you see them going right now, because we saw some negative momentum over the past couple of days. It seems that has tapered off today. But overall, what are your views on the market movements?
Thank you for having me over. In today's session, the NSE 20 ended the day at 45.05, which translates to a slight improvement of around 2 points compared to yesterday's close. The market, we expected to maintain at that level, keeping in mind that the elections are sort of around the corner. On the gainer side, we had Pan Africa Holdings improving by 7.7% to end up at around 48 shillings. And this was largely due to their favorable performance that they recently announced. The pre-tax profit was 51% year on year. Last year they had a pre-tax profit of 552 million, and this time around they had around 834 million, which is a pretty good performance for them, making them to be the day's gainer. Also, the gross premium for the underwriter was favorable, largely driven by high persistency ratio and new business, and also their investor participation in the counter today. I think, in my opinion, I think it's due to the proposed dividend payment of around 3 shillings, which translates to around 50% compared to what they declared for last year.
I mean, 51% growth in profits is certainly not a number we see for insurance companies here. But I mean, given the fact that coming off a low base and there's still such penetration in Kenya when it comes to insurance, I suppose catching up when it comes to improving the access to insurance in Kenya. What do you think about sustainability of growth in earnings like this? I mean, can it continue to deliver results like this?
I believe so. Keeping in mind the insurance industry in Kenya, the penetration level is at a minimal, and what will make them to have favorable future results is the kind of new product offerings that Pan Africa as a company will initiate, and giving them a stronger footing in the insurance sector.
When it comes to Pan African's market share right now, where does it stand relative to the other insurers?
Pan African market share, between Pan Africa, the listed insurance companies, you have Pan Africa, Heritage, UAP, which currently is trading over the counter, and also British American. We see for most of the major players in the market, they command less than 10% of the insurance market. So as a whole, for the insurance sector, for Pan Africa in particular, they stand a better chance to increase their market share in future.
Do you think that you're going to see consolidation in the insurance sector, given that there are so many insurance players right now?
Insurance players are looking for ways of growing their revenues. Mostly, maybe the mergers might be in areas to do with general, but that's an area that we'll wait to see how it turns out in near future.
Now let's turn to the banking sector, because now the banking sector is being blamed for pulling down GDP growth slightly in 2012. It's estimated at around 4.7%. And the economy secretary still has to confirm that number for last year. But that just indicates the pressure that banks continue to be under to reduce the cost of lending in Kenya. your thoughts on this number? Is it really fair to say the bank's high cost of loans is holding back GDP growth?
Yeah, I think in my view they are holding back GDP growth because towards the end of last year and early this year, the central bank cut the lending rate, but we are yet to see substantial changes in banks' lending rate. The government had projected a growth of around 5.1%, but whatever they have, 4.7% is much lower than what they had targeted for 2012. Going forward, they are saying that they are targeting around 6% growth, but this will largely be driven with the inflation level, adequate rainfall to cater for the agricultural sector, and also the kind of investment, direct foreign investment as a country will be able to attract in areas to do with mineral oil, mineral resource prospecting, and also geothermal areas.
Mm-hmm. Now, looking at issues outside of the markets right now, more broadly looking at growth sectors, the mining sector, of course, is very topical right now. A lot of people investing, a lot of people looking for opportunities in East Africa and Kenya. But the government now slapping on this 20% withholding tax on any mining sector deals. Do you think that that's going to hold back investment into the sector?
No, I don't think it will hold back investment in the sector because the government intention of introducing the tax rate was because the investors who are located blocks in areas to do with oil prospecting, but most of them didn't do any major investment in those areas. They were only prospecting to sell to the big players in the market. So that's why the government decided to introduce a rate for local guys. It will be 10% for the residents, and for the non-residents it will be at 20%. This is just to also help Kenya Revenue Authority to plug its revenue deficit, as the government needs to come up with more ways of sourcing for revenue, so as to be able to fund its activities.